All right, Hunter. Well, I'm looking forward to today's episode. I think it's something that our listeners are going to be excited about, that they've certainly heard about, and that is crypto. So why don't you go ahead and get us started?
There are a lot of misconceptions about crypto that I hope we can clear up, and a lot of really cool potential uses for it that I want to highlight. To get us started on it, I want to kind of cover what a blockchain is. It's how all of these cryptocurrencies are transacted, how they store data on an open, trustless platform that's distributed across hundreds of thousands, if not millions of computers worldwide that no single person really has access to or access to change. These are historical records that are immutable in some terminology and really the core backbone of how these cryptos function.
Yeah, I think that this new technology, or relatively new, I guess it's been in the news for quite some time now. So something that listeners certainly have at least heard of at some point. But I think that the technology itself is what's the important piece to really understand and is a good starting off point for how we talk through cryptocurrencies, tokens, smart contracts, things that are getting used in today's financial system, in today's cryptocurrency and blockchain system. And so, as you mentioned, yes, these blockchains are trustless. They don't require a centralized group. They're decentralized, and they operate because you're reaching consensus on a distributed level. And so all of this data, in order to put it in just simple terms, you're able to put, say, a contract on the blockchain without some kind of third party or middleman to confirm whether or not it's accurate or it's going to get triggered appropriately. So think about all your traditional financial systems like an escrow account or things that require a middleman in order to operate functionally so that both parties can trust that the agreement is going to get triggered. Well, the blockchain is essentially eliminating that. So it has very wide applications to, especially in our industry in finance, and is something that a lot of people don't realize because it's not just these cryptocurrency funds, these crypto companies that are utilizing this technology. JP Morgan has the largest private blockchain in the world. They process over $10 billion of transactions every single day. They passed $1 trillion of transactions, and they're using this to transfer money around the world because blockchain is such an efficient, fast, like we said, trustless and secure system that can definitely be used. And I'm sure most people are familiar with the cryptocurrencies that we're going to talk about, Bitcoin and Ethereum, but a way to transfer assets and money in a way that's much faster than our traditional banking system.
I think it's interesting to bring up JP Morgan, who Jamie Dimon, their CEO, has not traditionally been a big proponent of Bitcoin or Ethereum or the public cryptos, but is more than happy to use it in a private fashion because it makes his business more efficient and better. So one thing that I want to point to right there, because just while we're on the topic, is I want to draw a distinction between blockchains being private and being anonymized. So everything you do on a blockchain is traceable, and people act like, it's a way for people to dodge around laws and all this stuff, but it's everything step by step is traceable. It's just all anonymized. You have a long series of random characters that represents your wallet address, and that's what can be tracked through these steps. And so for someone like JP Morgan, that makes it really easy because essentially an account number and their private log of all these account number transactions as they go through. And it does a lot of the work for them that they used to have to do much more manually, much more labor intensively.
Yeah, I think it's going to be interesting to see how the technology continues to develop and how more of your traditional finance firms use blockchain and use even the public blockchain systems, Ethereum, Bitcoin, in order to run some of these transactions. I think the next step in this generation or iteration of cryptocurrency and blockchain for the masses is developing the front end systems, like an application on your phone that will enable users to very easily use the technology without even realizing that blockchain is what's powering the back end of it. I think that's really how it's going to reach the masses. It's almost like how the internet was established in the very beginning. Unless you could code in HTML, you really didn't have a lot of options as far as how you could set up a website. But now you've got all sorts of systems that allow you to build it without even knowing how the process even works. And so I think that's really the next step for blockchain implementation, the financial system itself. But what I would really like to talk about today is, and something that's been in the news quite frequently lately, is Bitcoin and Ethereum. We're going to talk about the ETFs here in a little bit. But first, I'd like to talk about, as far as cryptocurrencies go, and we'll talk about stable coins in a little bit as well. But as far as cryptocurrencies, why they're really the big names in the room, why they're the ones at the forefront. And a lot of that has to do with the length of time that they've been operating. The Bitcoin and Ethereum blockchains have been operating for quite some time now. Bitcoin has a $1.3 trillion market cap, and Ethereum is at $450 billion. And we're at close to all-time highs on both of those. Cryptocurrencies are starting to kind of enter another bull market. And we'll address kind of the more esoteric, meme coins and tokens and things in a little bit. But I think just because of the size and stability of those are really what I want to focus on in this episode, because that's really the foundational piece that I want our investors to take away from this is what's the difference between Bitcoin and Ethereum or its asset Ether, and why does that matter for them and potentially why they would want to get invested in it. So can you kind of lead us off with how we think about Bitcoin as a cryptocurrency in relation to your traditional asset classes and what makes it special?
Yeah, so Bitcoin's really set itself up to be the digital gold. I know a lot of people use that example and that analogy, but it really holds because not only the length of time that Bitcoin's been running for and its proven security throughout that time, but also the founder's intent with very few changes to be made. We're going to walk through Ethereum later on and see how that's very different. But the core principles of Bitcoin is that it is unchanging. And so throughout time, it can be trusted as that stable digital gold, as a source of reserves, essentially. We can talk about the velocity of money in Ethereum that Bitcoin has less of, but it serves that purpose really well as a stable reserve that's been proven throughout time.
Yeah, I think that looking at Bitcoin as that store of value, as that transactional currency, is a good way to look at it. You're not necessarily using the Bitcoin blockchain to power a bunch of smart contracts or more sophisticated blockchain tech, but it is that established foundation of cryptocurrency where people are going to look at it, hey, this was essentially the original one, and we're going to look at it like that asset. If we're going to store dollars in cryptocurrency, that's where we want to keep that, as far as something that's going to hold its value, that's going to be there with staying power for the long term. And then to take your commodity metaphor a little bit further when it comes to Ether, is what I like to look at it, whereas Bitcoin is the digital gold, I like to look at Ether as the digital gasoline or the digital electricity that powers the blockchain. And so if you think about it, the Ethereum blockchain is really built for transactions, for these smart contracts, for more bandwidth than Bitcoin. And that's why it's getting used more for these smart contracts, for the what we call DeFi, decentralized finance applications, is because it has more capability of bandwidth for these transactions on its blockchain. And so I like to look at it like Ether is the gasoline that's used to power that blockchain. And it's important to look at it like that, because if your smart contracts, if your transactions are the cars on the road, you need an asset in order to power those transactions. You have to burn Ethereum, Ether, in order to run those. And so it's almost like that Ether is fueling that economy of the Ethereum blockchain. And so I really like to look at it from that perspective, because if you're bullish, if you're positive on blockchain technology, on Ethereum as a blockchain, more decentralized finance, more smart contracts on the system, and that means there's, to continue the metaphor, more cars on the road. You want to be invested in that gasoline or that electricity that is powering that ecosystem.
Yeah, and something that I think is important about Ethereum versus a lot of the other cryptocurrencies that are trying to take that similar gasoline decentralized finance economy is that Ethereum was built foundationally as a very secure blockchain. A lot of people are giving up security for that velocity of money or velocity of cars, and that's not always proven to be the best route. But Ethereum's built this very robust, secure underlying structure that's allowed so many people to build on top of it into the layer twos. And other projects built on Ethereum, that so it can serve as that core foundational blockchain.
Yeah, exactly. And I think that that's why I'm positive on Ethereum as a structure, is because it has those two key pieces, which are the decentralization and the security, and then with enough bandwidth to power the transactions. Because if you look at traditional blockchains, you kind of have to sacrifice one of those three. It's either bandwidth, security, or centralization, or decentralization for that matter. And so I think Ethereum has really accomplished all three of those fairly well, while developing more capacity on that bandwidth piece. It's really good for the decentralization, meaning that no single entity or small group of entities can control the blockchain. It's good from a security perspective because that blockchain has never gone down. Ethereum's been extremely stable. And then they continue to improve it by improving that bandwidth piece. And so moving on, I think that the kind of third piece that's really important to understand from a finance perspective, from a decentralized finance perspective, is stable coins. Hunter, can you kind of run us through what those are and how they're used?
Yeah, I think stable coins are potentially the most undervalued part of crypto right now. These are really interesting and really real world applicable use for cryptocurrencies. It's a way to transact in US dollars, or, they have stable euros, stable British pounds. The most popular throughout the world is the stable dollar. Well, a lot of these stable coins, these crypto dollars, are backed up by real US dollar reserves and are actually redeemable for that currency, ensuring that one-to-one peg. So if you own $1,000 in USDC, for example, there is a function to translate that back into US dollars. So it's adding that real world exchangeability that a lot of people don't really see in most crypto applications, because they'll say, okay, that's great. It all exists on a blockchain, but how do I get it off that? How do I use it for real things? And these dollars are a great way to look at it, and great way to actually go purchase things and use it as that form of money. And I think I want to, revisit Ethereum real quick on, kind of one of its big differences from Bitcoin is that they have consistent upgrades. They do these, what are called EIPs, and Ethereum improvement protocols, to better Ethereum as a whole. One big one of those was moving from proof of work, like you have Bitcoin mining, to proof of stake, where you're actually just staking your Ethereum. It's much less power intensive, way greener in a lot of ways than how Bitcoin operates. But a lot of these Ethereum improvement protocols are allowing higher velocity money, lower transaction costs, like one of the latest improvements, lower transaction costs by magnitudes. So I can send you now with stable coins as well. I can send you on the Ethereum network 1,000 USDC, and it'll cost me about a penny to have instant, trusted, on the blockchain transaction recording it.
Yeah, it's pretty amazing. And I think now that those transaction fees have gotten that low, the barriers to entry for new investors has become much less significant. And so you have new Ethereum wallets, new crypto wallets in general popping up every single day. And you're really starting to get to that approach. Like I said, I think that final step is the user interface that's going to make it, more attractive and a lot easier for the individual. But I know you and I have run transactions with stable coins, transferring them and such, and it has become so much cheaper, so much easier, and it's really, really pretty amazing. Now, something else that I'd love to mention as we're on the stablecoin topic is the news around central bank digital currencies. And this is something that's been a popular topic in politics in the United States, whether or not the Federal Reserve or maybe another international Federal Reserve like the European Union would potentially create a centralized stable coin. And so instead of using US dollars, paper money, you're just transferring digital currency instead. I think a lot of people are concerned with the security piece of that, whether people could be restricted from using their US dollars. It looks like, and we're going to talk a little bit more about the political piece, but it looks like a lot of politicians are pushing back against any potential, at least in the US, Federal Reserve digital currency. But I think it's really something interesting to bring up because it looks like a lot of countries internationally are pushing for these central bank digital currencies.
Yeah, I think that's a really interesting concept because it's, over time, as we've moved from cash to credit cards and potentially into a central bank digital currency, we've lost a lot of privacy or, anonymity as far as our financial transactions go. Nowadays our banks can see pretty much everything we do. And the big concern from a lot of people is that you're taking crypto, which really was founded as a way to get outside of the banking system, regain a little of that anonymity, just so you don't have Big Brother watching everything you do kind of thing. And a big concern is to have governments leverage that to have not only direct visibility into everything people spend their money on, but then a permanent ledger accordingly, and then to be able to very easily limit those transactions, because if they're the ones running the blockchain, they get to choose which transactions are included in a block. And if they determine a certain wallet address is, maybe not doing things they like, they can just add them to a blacklist and their transactions aren't getting posted.
Right. It's really interesting. And I think something that's definitely worth watching. I do feel fairly confident that the US at least is moving away from that, but it's certainly something that the Fed has given some consideration to. They have said that they are not currently developing a central bank digital currency, but something certainly that we're going to be watching. Now, moving on, I'd love to address the meme coin craze, if you will. So for our listeners who aren't necessarily familiar with memes, I'm talking about Dogecoin or Pepe coin or whatever kind of crypto coin that traditionally gives crypto this bad reputation. People just generating coins out of the blue to make a quick buck, dumping them on potential investors, and then running away with the money. We don't give a lot of credence to those. We like to focus on the technology and the backdrop of what we're investing in, whether that's a corporation or that's a potential cryptocurrency. And so that's why we're really sticking with Bitcoin and Ethereum. So to make it clear, you and I aren't taking guesses on meme coins, if you will. But it is certainly interesting to watch. I mean, you've recently had the GameStop and AMC stock craze going back on, with those being extremely volatile, gaining some appreciation. Meme coins kind of doing the same thing along with it. But I would caution anyone looking to invest in these. It's a little bit more like going to Vegas and taking a spin on the roulette table than it actually is an investment.
Exactly. I don't really like meme coins because, like you said, they kind of give crypto a bad name. I think there's a lot of really great underlying technology there that can be leveraged for really great things. I also think it's giving some people, an avenue to misuse it and for personal gain. However, I think there are a lot of a lot of similarities you can draw, like you did with GameStop AMC, a lot like we saw in leading up to 2000 with the .com bubble. Anything that was labeled .com immediately got bought up, whether it's a real legitimate company or not. These things happen all over the place, and it's a shame to see it, going on in crypto, but it just kind of comes with the territory, unfortunately.
Yeah, this is a financial market that's in its infancy still, and there's going to be problems. And that's where it's our job. One is prudent stewards of capital, but two is just investors in general. And this applies to any retail investors. Just be smart about what you're allocating your capital to. If you're going to invest in some of these things, understand what you're buying and why you're buying it. If you're looking for a lotto ticket, then that's exactly what you're buying. But just be careful whenever you're looking at these things. If you're considering investing in them at all, I would suggest probably not the best idea, but it's everyone's individual capital, so they're able to do what they want. But kind of going off of that, I know that another piece of the crypto market that has been somewhat in the headlines, whether our listeners have heard about it or not, are tokens, especially non-fungible tokens, NFTs. I think people are traditionally, when they think of an NFT, are thinking of, hey, people are spending thousands of dollars on this little digital image that I can just right-click, copy, paste. I know that doesn't make a lot of sense to investors, but there is some really interesting tokenization technology, and I'd love for you to step through that a little bit.
Yeah, so the NFTs get associated with those pictures because that's the broadest use case that people understand. But if we take a step back, NFT just stands for non-fungible token. Well, that just means anything that's not a currency, essentially, because currencies are fungible. You've heard about fungible dollars. Well, anything that's not non-fungible is just a unique something. So NFTs as pictures are getting, traded up a lot and kind of following a lot of that meme coin stuff. But there are a lot of really cool possibilities for NFTs outside of little digital pictures. Think about an example I like to use a lot is like a deed to a house or a deed to a car, something that you would traditionally put into a safe or even go rent a safe lockbox at the bank to deposit that for safekeeping. Well, you could create an NFT of that. All that means is just a tokenization of something and put it on the blockchain. And now it's out there on those hundreds of thousands, millions computers worldwide. And that's your secure storage now. It's out there. A fire can't damage it. A natural disaster, theft can't come afflict that item because it's just sitting on the blockchain as proof that you own whatever asset that is.
Right. And title theft is a real thing. So thinking about the fact that you could tokenize your deed or title to your home, have it on the blockchain, decentralized, secure, and you're the only one who has ownership of that is extremely, I think, exciting and interesting because this is a true application of this technology that maybe not everyone is really thinking of when you think of NFT equals digital photo.
Exactly. And again, still in its infancy, but we have seen actual real estate transactions take place on the blockchain, and it can reduce a lot of those closing costs as far as, transferring ownership of a deed or title, and, facilitate those transactions a lot easier, even if it's a car. Okay, I pay you on the blockchain. You can see that on the blockchain, and then you can see that the deed or title went to me. It's all stored right there. That's your bill of sale. That's your proof of sale and title change all in one right there.
Yeah, I think it really honestly won't be too long before we start seeing transactions for regular people who aren't crypto native or, with a lot of crypto experience, having business that start to run transactions like this.
And I think that goes back to what you were talking about earlier is the user experience. And I know that's something that the whole of crypto is really trying to address right now is that crypto can be a very complicated thing to get into. And, something that they're working on improving. But as far as individual investors and institutional investors, that leads us into the conversation about the new ETFs that are approved. Victor, you want to take us through those a little bit?
Yeah, so we saw back in January the Bitcoin ETF get approved that holds actual spot Bitcoin. So whenever you invest in this ETF, your dollars are backed up 1-to-1 with Bitcoin assets that are stored, somewhere and this goes back to the security of it, because I think this is a great way leading into our conversation about how people can actually invest in these things. It's a very easy way to invest in Bitcoin or Ethereum if you're not looking to self-custody your digital assets. If you don't want to go through the process of setting up a crypto wallet, worrying about the security. I mean, we mentioned earlier, there's no help desk when it comes to being your own crypto custodian. So if you forget your password, I mean, I'm sorry, but you're out of luck, because there's no one you can go to help recover that. And we've seen that happen. You hear stories about that all the time, as far as people who have thousands of Bitcoin from long ago that they forgot about because it was worth pennies, and now it's worth millions of dollars, but they forgot their password, and so they don't have control of it. But the good thing about these ETFs is they're backed up 1-to-1 with Bitcoin, following the spot prices, and they're reasonably secure, because these companies that are issuing these Bitcoin ETFs are holding the majority of that Bitcoin in what's called cold storage. So something that's totally disconnected from the internet, that's typically in some kind of underground bunker or vault where people can't get access to it. And they only actually access those hard drives on maybe a quarterly or biannual basis. And so this is a good way to get access to these cryptocurrencies, because it's safe, secure, and it works with your traditional financial system. So if you have, a Fidelity or Schwab account, you can buy these things and then have direct access to them on the blockchain, through your custodian account. And then I think number 2 is, we saw very recently, although we didn't necessarily expect for it to happen, but the Ethereum ETF got approved. So that applies to that one as well. Those ETFs can now follow Ethereum spot prices, and you can get exposure via your US dollars in your traditional brokerage or investment account. And I think that's really exciting.
Yeah, it's taking crypto and putting some guide rails on it, making sure that you access it through the same things that you're familiar with. And in addition to not only storing their assets in cold storage, these ETFs also have insurance taken out on them. So you have those multiple layers of assurance that the funds will be there if you ever decide to take it out as cash.
Right. And I think it's really interesting, going back to the Ethereum ETF piece, is that for a long time leading up to it, and you and I follow especially the Ethereum market and Bitcoin markets pretty closely, but there wasn't a lot of anticipation that these ETFs were going to get approved by the SEC. But what we've recently seen in US politics is there's been a very big shift towards being crypto friendly, especially towards your legacy assets of Bitcoin and Ethereum, because there's demand among the US populace to be able to invest in these things and to be able to support them as, a political system.
Yeah, I think it's really interesting, because you've seen over the course of really a week, the political pressure ramp up on the SEC, on our representatives who see it as a potential election issue, where you had traditionally the Republicans more in favor of the crypto world and Democrats kind of pushing back on that. And now you see a lot of that, moving over to being crypto friendly, because that's an election issue that people care about.
Right. Yeah. You've seen bipartisan support for recent bills going through Congress. And I think that's really interesting. And then the fact that the SEC pretty much did a 180 when it came to the Ethereum ETF approval was pretty significant. I mean, none of the experts considered there to be more than a 10% likelihood that this would get approved. And then within a week, that shifted to being essentially 100% and then it going through. So it's really interesting. And I think, talking about these ETFs, I want to talk just briefly. We've already kind of spoken about it, but getting invested in some of these things. So what kind of place do they hold in a portfolio? Should a retail investor get invested in these? what does it exactly mean for someone who's invested maybe only in traditional stock market and liquid alternatives previously?
Yeah, so it's obviously all going to depend on each individual's investment priorities and what they're looking to get. But I think it holds a good place in an alternatives portfolio. Just getting some non equity, non bond exposure in that investment account as, like you said, a liquid alternative. We're seeing a lot of, as we've spoken on before, private equity, private credit funds being more accessible. I think this is another example of another alternative that was much more difficult to gain access to in years past. All of a sudden, it can take a place in your portfolio as just a small piece in a broad portfolio, but one that can help diversify you away from your traditional forces.
Right. And I think if you believe in the technology behind it, there's good reason to be positive on the assets themselves. And I think one of the barriers that kept people very hesitant before was the political piece of that. And now you've got bipartisan support for cryptocurrency, especially Bitcoin and Ethereum. And so that piece has essentially removed itself from the conversation. And so now you can feel a little bit more comfortable saying, hey, the US isn't going to ban these cryptocurrencies or these blockchains in the next foreseeable future, certainly. And so you can feel a little bit more comfortable saying, hey, these technologies aren't going to go away for US investors. And so the assets that are backing them, that are powering them, could potentially appreciate pretty significantly, because I know you and I talk about this a lot. We've talked about it through this podcast, but this technology is real and it's continuing to get used more and more. And so having some exposure, very modest, we're talking, one, maybe up to 2% of a portfolio in these things, I think is prudent for investors as an alternative, something that's not correlated with stocks and bonds that can have some pretty significant price appreciation in the future.
Yeah. And to that point, less than a year ago, you had all of the leaders of the big banks of the US and, testifying before Congress, Elizabeth Warren talking to Jamie Dimon and talking about banning it all. Jamie Dimon came out more anti-crypto than even usual, saying, if I were the government, I would ban it all. Well, that's been a total 180 from that, 9 months ago, and alleviating a lot of those concerns for people, allowing it to take a place in a portfolio as a legitimate alternative investment.
Yeah. Well, Hunter, I think this is an exciting episode. I know that crypto is on the mind of a lot of investors when you're not talking about your traditional equity and bond markets, your traditional assets. So I'm glad that we got to run through some of those things and then kind of talk about, why it may be worth getting invested in it.
Yeah. Thanks, Victor.